Yeah, a little bit more weakness makes sense in September. I mean, I'll be honest, we can get into some of these things, but when you're up over 10% for the year going into the normally troublesome month of September, it doesn't do as poorly. In fact, it's up on average. But again, I think it just makes sense that we still consolidate here, not the end of the world. It's just kind of where we should be focused. And what encourages us, though, is you look at, yes, we've had this 5% approximately pullback in the S&P, more and, I get it, more in technology, some other areas. We're starting to see some skepticism coming in, everybody. We've got more, more bears than bulls in the AAII poll for the first time in 12 weeks. There's a survey of active managers, the least bullish they've been all year. Put to call ratios, the highest they've been all year. There's just some positive factors to say, listen, we're not going to slip, slide, and just crash in September. Not saying that at all. But again, maybe we're getting close to a low, but just some choppy seasonal frustration is normal.
I mean, having said that, you could argue that a little bit of a pullback, especially around some of these AI names, pretty healthy when you consider the incredible run-up that we have seen, at least in the first half of the year. I mean, what's the sort of range that you think investors should be looking at, and what do you think is going to be driving the market?
Yeah, great point there. I mean, again, tech, communications, AI, those names have had incredible runs. You look at just today, right? What are we seeing? We're seeing some small caps leadership. We're seeing cyclicals. We're seeing materials. Those are some of the areas we think as that baton gets passed around. Energy also, right? Energy is a very small percent of the overall S&P 500. Energy stocks would go straight up for a long time. It might not matter to the market, but to someone who has some exposure, clearly that matters. And again, when you look at the S&P, like I said, around 4,300, that was the peak last August or so. So that makes sense. And it's close to the June lows also. So that makes sense, probably the bottom of the range. And, up around 4,500 or so makes sense. So we just kind of maybe chop around here. The good news, and there's always got to be some good news, right? We don't see any reason not to think that this fourth quarter won't be strong. Historically, fourth quarters of a midterm year are strong, especially after a good start to a year. What's going to drive us? You just mentioned. I mean, we think it's the economy. We don't see a recession. We've said all year there's no recession coming. I love earnings, right? Who doesn't love earnings? I mean, earnings estimates are up over 2% from the start of this quarter. I mean, what's that tell us? Well, maybe corporate America didn't have great things to say about the past quarter, but it's the future that the market cares about. And that is what's going to help drive, we think, eventually, once we get through the seasonal period, pretty strong fourth quarter, probably the new highs on stocks before all is said and done.